Right. Good afternoon, everyone. Thank you for joining us. We're looking forward to having a little bit of an overview of what we think is coming up because Dave can tell the future, just so you know. But anyway, so there's a couple changes, of course, that we want to talk about too on the housekeeping side. But if you have questions as we go, just raise your hand. We'll unmute you or use the chat feature. Either one works. A couple things you may have noticed, though, RMD factors did change this year. They updated them, so they've come down a little bit. So if you have questions on that, give us a call. We'd be happy to talk you through it. And also they didn't change some of the rules, like backdoor Roths are still available. So some of this fun stuff that didn't get updated, we're excited about. But I'm going to leave it at that. Dave, let you go.
Okay, great. Well, it was just a brand new talent apparently I've developed, and that is to be able to know what's coming in the world. We always say, obviously Jennifer is joking, and we have no idea. That's the way the markets work. That's the way our life works. And I think there's no better example of that than thinking about all of the predictions that there were for 2021. But to me, also just to look at 2021 and to think of all the news and all the angst and everything that was happening. And let's just kind of kick it off right there and talk about what it is that we were looking at last year, all of the bad news that we had to digest every single day. And of course, it's all noisy all the time. And you hear this. This really looks a lot like CNBC to me, frankly, because you have them on there and they're buy, sell. They're always yelling and screaming about stuff. And at the same time, they're always sounding bullish when the market's going up. They're always sounding bearish when the market's going down. They all sound like each other. It's the epitome of group think, really, right? Everybody's just following the herd, and they do it though in an intelligent sounding way. And it is pretty crazy, but thanks for that little cartoon, Jen. Let's look at the more serious side of what we worried about, right? This is so true. We were so worried about all the politics of 2021, right? What was going to happen when Georgia went the wrong way, right? And now the Senate was going to turn. And that was going to be a disaster in 2021. And of course, the Delta variant, that was rampaging. It turned out to be deadly. And we declared, at least the White House declared, that the coronavirus was dead. I believe that was June or July. And obviously, it was not. And it became more deadly than in 2020. Still, the economy didn't shut down. Afghanistan happened. How could anything have been more disastrous a retreat when it comes to sending a signal to China, to Russia, to the rest of the world about our strength and our, if you will, our determination to help our allies? The one I wanted to touch on too, it doesn't sound like much, but remember when we're talking about supply chain issues, and there's the Suez Canal, and it's blocked by a ship. And you couldn't stop the doom and gloom report of how this was 25% of the shipping around the world. It was 50% of all the oil travel, international oil went through the Suez Canal, stuff like that. Big numbers, right? And it was going to be devastating, and nobody knew how to get a ship out. And I can't help myself but to say, really? This is a ship is going to be the reason why the entire world shuts down. A ship is stuck, and we could put man on the moon, we could do all kinds of things, but we cannot unblock a canal. And of course, that is the kind of thing that we have to deal with all of the time with the news. And it's constant. And so we talk about supply chain issues like they will never get fixed. Yes, they will. Yes, they will. Government spending is out of control. Inflation is back, and it is. Is it under control? Is it out of control? Is the Fed going to have to raise rates 10,000 times this year, right? It's going to be none. It's going to be 3. Now it's going to be 4. That's the worry. And this is the worries in an up market. And what I think we miss is that we miss all the amazing things that also happen. And that's because news is not balanced. It's pretty close to 100% bad all the time. And it's not just bad, it's loud. It's loud. It's like, watch us, we're scarier than all the rest. right? And they scream and yell at you. And it's kind of like, I saw this clip. It's pretty funny. I believe it was CNN. It might've been MSNBC. But they were like, the number of children, juveniles in the hospital rooms and intensive care is blown out of control. Doctor, what are you seeing out there? We're not seeing that actually at all. And so this is what we look at. We can laugh about it, but the truth is, it's really hard to see the positives. A COVID vaccine, a reopening. That's why markets are working. We reopened. We have billionaires, not a bunch of, if you will, government scientists working super slowly for the last 15 years to, put a satellite around Mars or whatever. Now we've got billionaires racing to space. Unbelievable. Unbelievable. And how fast we're going to be moving to that. What other technologies that might create. Think about what's going on in electric vehicles as well. Not because of governments. People. Lots and lots of money being thrown at these different things. Low interest rates, helping to really help underlie the economy as well. We don't pay much attention because right now, really interest rates are rising, and that's scary and frightening, and it sounds like it ought to be. And so again, that's put into the worry bucket, not that they're low, super low. Maybe they go up a little bit, but they're still really low. And what about profit growth, which is really the driver of the market, right? It's what corporate profits are, sales, cash flow. We're at record levels, all the above. Record levels. So people say, how can the market be at record highs? I don't know. Maybe it's because they have record profits, record cash flow, the best balance sheets ever. Not sure, right? We sometimes lose in the positives what there is. And now, and we'll talk about this, maybe we'll talk about this a little bit more because we got some interesting data you may or may not have seen. Is Omicron the end of COVID? I don't know. And I'm kind of tired of saying, I'm not an epidemiologist, but I'm about to give you raw data from the CDC, so I'm not sure if I'm allowed to do that. It's data. It's just plain data. And the only data that we don't trust, shouldn't trust, never trust, is when some politician is trying to tell you why or why not you should mask up, vax up, whatever the answer is that they're trying to do. But this is just data. What's happening with Omicron so far appears to be very, very, very positive. And so now, as we look at this very busy chart of lots of numbers, they are all positive, so it's a good chart. We like these charts. But this is last year's performance. And look at that. The S&P, in spite of all of those worries, up 28%. And again, it's the right side of the page, the hidden side of what's really going on underneath. Record cash flow, record profitability, all of that stuff is the reason why we're up 28% in 2021. Stunning numbers. And as we look at that, and I want to see this next chart. I know we're kind of busy through some of these charts, but I really do want to see the next one because I want to show you a couple of things on this chart. Okay, here we go. This right here is talking, and we've already got this circled, and that is the energy sector. This is why when we go back to that chart, and again, I know people are very, very sensitive to politics. This is not a political statement, okay? This is a statement of fact. Last January, the beginning of last year, full knowledge of the markets before, but the beginning of last year, the President of the United States, one of the very first things that he did was to take out the pen, have an executive order that we were shutting down the pipeline. That's it. No more Keystone. Out. And we are going to curtail tremendously any energy drilling in this country. It's going down. The energy sector, wow, this is frightening. What's going to happen to us? We are hated in DC, that we are trying to be shut down by Washington, DC. The only ask for energy is, please, OPEC, send us more oil because Not going to drill for it here. And then, as you can see from the chart, the number one performing sector, up more than 50%, is energy. Unbelievable. When we sit there and we think about what we know and understand this, what you know, what we know isn't worth knowing, is a really hard one for people. It's really hard because it's reflected in prices already. Because Joe Biden was taking office, because he promised to destroy the energy industry. The actual carrying through of that was no surprise to the markets. We take today's news and we pretend, and not pretend, but it just has that impact that makes us feel like this going forward changes everything. When we look at the top performing sector, there couldn't have been a more hated, targeted sector by the most powerful people in the world. We hate you, we're taking you down, and we have the power to do it, and it's up 54%. And so lessons to be learned, of course. Markets correct before, they look forward, and they get overdone on the downside, and now they're rocketing higher. It's amazing when we think about all these different cross currents and how we take today's news and we go, yeah, but what? What about this? What about that? How are we going to handle this? How are we going to handle that? What about rate increases? What about Bitcoin and all these other things? It gets us off the focus that corporations are these little pods of super creativity, innovation, determination to change things and make money and to make the world a better place. For some reason, I don't know why, but capitalism and corporations in particular get a really bad rep. I've never seen a government that did anything well. I've seen markets work very, very well. And what we have now is, after 2 years of a pandemic where literally the entire world walked over and flicked a switch and shut off the economies, the politicians, and we collectively, that's us, have the wrong impression that you can walk back and just flick the switch on and it'll work. And it won't. It takes time. We broke it. They broke it. It didn't take 2 weeks of a shutdown to bend the curve or whatever they promised us, slow the curve. Many places have been shut down for more than a year. That means broken supply chains. It's taking time. They'll fix it. Well, it'll fix if the markets are allowed to fix it. The more that the government gets involved, the more likely it won't fix. And the way to think of that is this, and it's working pretty well. The markets have to deal with millions of different little bits of information, and that does it very effectively. From cutting down a tree, to having loggers come get it, to taking care of the logging camps, to taking care of the chainsaws that make that work, to getting that lumber to a house, to have it built, and on and on. Somebody's getting a mortgage. All of these are different little bits of information that come together for something we take for granted. Markets work. You and I, or bureaucrats, and maybe bureaucrats are even worse at this, can maybe hold 10 thoughts at one time. We could maybe puzzle through 10 different things. We could never handle the way a market does naturally, in its own selfish interest, however you want to think of it, way of taking care of things to bring lumber cut, seasoned, ready to roll, and have people there to put it together. And all of the steel and all of the things that are put together at some factory a zillion miles away, from out of iron ore, out of all these other things, and brought together in one place seamlessly to build a house, and financed by this other group over here. It's interesting. And when we think about it, we recognize how really amazing and efficient markets are. It does work. It does work. So let's roll on and take another look here. I want to talk about this slide here because it is absolutely, to me, says so much about the last 20 years. I don't want to just talk about the last 20 years. I want to use this for lessons going forward for the next 5 years. When we look back at this period of time, I want you to understand that this was not a good period of time for the markets. We had 3 big bear markets during this period of time. In 2000, the market was down over 50%. In 2008 and 9, it did it again. 2020, we had a 33% down, although it came back very quickly. Thank you. That's a lot of drops to equate a 7.7% compounded annual return in the S&P 500. Better than that for mid cap and small cap. They were both over 10 per year compounded. But as we look through 5-year periods, the reason I like to do this is to think about and remember. Now, I'm in a position to hear from a lot of different people. Well, Dave, what about this problem? How can the market keep going up? Let's say it's 2018. How can the market keep going up? Donald Trump is about to be elected president. What do you think is going to happen? Don't know. Joe Biden's going to be president. What do you think is going to happen? Don't know. The market's overpriced. The market's overpriced. The market's overpriced. And it continues to go up over long periods of time, not every year. Not even every 5 years. As you can see, there's a couple negatives on that chart. We can't take away all the time and continue to worry and be beaten down by what the markets are doing or not doing. It really is a problem for us. We have a hard time zeroing in on any of the positives out there, any of them, even if they are amazing. Even if they are amazing. Now, as we get into this, I want to further reiterate this as we look at a couple other kind of fun charts, okay? But I want to mention this on the way to the. We always focus on what is wrong, and it's a human nature thing. It's totally human nature. I'm not faulting you. I'm not going to fault me, okay? I worry too. I know, for example, I've been looking at the market and going, this is just crummy. It's just bad. You know, the market looks terrible. And it started off this year terrible. And the reality is, though, it was up 28% last year. I think it's more than due to have a couple of days off. Markets aren't supposed to go straight up. We never even had a 10% correction last year. And we're supposed to have one every year. We haven't. We haven't for ages. Since really the market went down 20%, 33% at the beginning of the pandemic. No 10% corrections. It's a long haul. We're due. I don't know that we're going to get it. We're down just a couple percent so far this year. Not much. But tech stocks look terrible. And they are. But what you have to do is you have to look within the markets. Everybody says the market is, you know, they'll dissect it. They'll bring it down. They go, oh, you know, if it weren't for these 5 tech stocks, the market would not be doing as good. If it weren't for this 10 over here, or whatever it is they want to try to cut apart. Market's the market. Just quit. If it was this or that, quit trying to dissect it to look for what's wrong. Everybody knows what's wrong. Just pick up the newspaper any day. Just pick that thing up any day. And it's garbage. Absolute everything wrong in the world. I mean, you have to go to whatever, section E, subparagraph 3. Probably it's a correction of some kind. Sorry, the kid didn't die. It actually lived. You know, whatever. It's so bad news all the time. And when we just inject that into ourselves all of the time, how is it we're supposed to see that the world has never been more abundant? More abundant. Never been more abundant. We're on the precipice of solving all kinds of cancer. We have gene therapy available. I don't know really what it means. I couldn't split a gene to save my life. But the point is we can do it now in a matter of hours what used to take years and millions of dollars takes a few $100s and a couple hours. What do you think that'll be next year? Maybe a few hundred less and less than an hour? We all know that's coming. And what does that mean? Does it mean maybe no more Lou Gehrig's disease and stuff like that and Alzheimer's? Because they got to hurry for me, I think, for all of us. It's just, all of that's around us all the time. And so what does that have to do with the market? It has everything to do with the market. It's that technology and that abundance that continues to drive corporate profits. I've told this story a zillion times on Zooms in the past and on the radio and everything. Is it, as an example, our office has hundreds of percent more business than we did 10 years ago and 15 years ago. And we have no more administrative staff. Multiply that across the entire world as to what technology has done to drive costs down. Think about what money management now does and how we charge so much less. And that's not just a pat on the back and you guys are great. We're doing good too because of the technology. What does it cost to trade at TD Ameritrade and Schwab? Zero. The spreads between the buy price and the sell price, called the bid and the ask, is pennies. It used to be 25 cents to dollars and hundreds of dollars per transaction. All of that means that everybody has much higher returns than they used to. It's a fantastic thing. And when I say that, I'm not just saying Wall Street's getting rich. Everybody is. And their costs are coming down. And we just go, that's the way it is. I appreciate that life is we just kind of bump along. But I think it's important that we understand how great it is. And sometimes those stories are just right in our face, right? They're right there. Because we look at something like Apple, okay? And when they invented the iPhone, it was like 2006, okay? And that's not that long ago, right? Really, right? I mean, it's not. It's not even in the last millennium, right? They invented the iPhone, this beautiful thing that changed the world. You didn't have to pick them up when they IPO or when they floundered and then nearly went out of business. Because they're up like 50-fold since then, since the iPhone came out. And how big is that? Well, it's too big when they get to $1 trillion. They can't keep growing. That's what all the people told you. And they really did. And you see, every one of those squiggles down was analysts telling people, you got to get out. The iPhone 4 isn't as good as the iPhone 3. And the 6 is no good compared to Samsung's Galaxy, except the Samsung Galaxy, it catches fire. But that's okay. It's got to trade it. And the only way to have that happen is to own I just saw the Microsoft on there. Own Apple. Own it. Don't trade it. And it's not that you own everything forever. There's plenty of companies that have disappeared or have laid flat. The things that in the past for the last 40 years, and it won't always hold true, that you can't own were automobiles, and you don't own airlines ever. The joke is if you want to be a millionaire, then you need to be a billionaire and then buy an airline and then you're a millionaire. That's the old joke because they're terrible investments. And maybe that'll change. But there's not every industry that you want to be in. There's not every company you want to be in forever. But when a company's doing okay, don't be quick to let them go just because people are dancing around and talking about how it just can't be that good. Way less than $1 trillion of market capitalization. I remember a very smart guy telling me, Dave, sometime you're going to have to let go of your Apple. Seriously. Because to me, it was an easy thing. It was an easy thing. As long as they had people that were in love with their ecosphere, and I am too, we all are. We're not trapped. Nobody's holding a gun to my head. But I like being in it. It's easy. So I'm staying, and more people are coming. And I'm happy to give Apple a couple of bucks a month to store my this and store my pictures or whatever it is. Apparently millions of people are. And so as we own these companies and their cash flows improve, we need to always remember that's really what drives these companies, okay? That's what drives it. Jen, have we got anything else for everybody before we answer questions?
I didn't know if you wanted to share any of the data we talked about on COVID with South Africa. Are you good with just?
Let's do it real quick because that's they're not going to get a lot of that data. So let's just touch on it real fast. It'll be real fast here, but anybody can get this stuff off of where we get this last one was World. Yeah, yep. First Trust. We'll shoot this out to you if you want it. This is a week old now, but this is a new cases. This was off of Worldometers, which is all the government's reporting. But this is, as you can see, if you can kind of see that blue line there, that's a 7-day moving average, and Jen will move it right down there. That's the new cases in South Africa. Okay, it is a double diamond downslope, folks. This is it's going away. And if we look, I think didn't we clip real quick there? Also clip the deaths in South Africa, which is not exactly a top-notch healthcare system, but their deaths right here.
This right here. Hold on.
Nope, it's right there on that back chart. You got it.
Was it back there? Oh, okay.
Yeah, it's just not up to date, but it's the same numbers. That's right 1 week. We're looking at 1 week late. That's why the little dip down on the blue line there is not quite as far as it was on the other chart, because another week of dip takes it straight on down. And you see the orange line there, though, is the deaths. And it just didn't budge, even as you saw cases spike. So is this the end of coronavirus as we know it? If it is, it's exactly as predicted by scientists, not politicians, when this started, that it would eventually mutate into the common cold and or flu, I think is how they expressed it at the time. So as we see, there's just that was the hope. And this is why, in my opinion, when we just look at data, that's what we focus on. I've got my own beliefs, got my own political beliefs, I've got my own, and there's some things that I just I'm rock solid on. But one of the things that I hope to get across is that there's no business at all taking political beliefs into economics. It's data. And to take this into science infuriates me, because people have died to try to get rid of the angry orange guy. And people are still dying because we won't do this or can't do that. And that's not a political statement. That's stop it. This is a virus. Let's deal with this in a positive way. Whether you're on the left, you're on the right, let's get this thing handled and quit making it political. And that is what the markets do. They don't care about your politics. They care about money and they care about moving forward. That is why the markets have been doing so well, in spite of, as you turn on the news at night, corona this, corona that, we're spiking in deaths and so on and so forth. The market isn't seeing it. It's opening up. And all you have to do is go to a concert, a football game in particular. We see them on TV every day. Stop by the airport someday. Just walk through and you'll see how packed it is and how ready people are to get out there. And if you don't want to stop by the airport, that's fine. Look at the TSA numbers, because they're back to pre-pandemic numbers. Unbelievable. People are moving about. And as far as economically, the virus is ending.
Very good. All right, you ready for questions?
Let's fire away.
Okay, so why are economists predicting Social Security will run out of money by 2027? The Biden administration is not even talking about fixing Social Security.
Because the Biden administration is not going to fix anything. They're not going to. That is a difficult political thing. Right now, everything's divided, number one. So I'll give them that. They're not gonna have a discussion. But I wish they would, because that could be a bipartisan discussion then, rather than a fear-monger discussion, which it usually is. Yes, Social Security is going to run out as far as the quotes pool of money, the Social Security fund, because we've now spent all the way through it. But that's not new. That's always been coming. The last person to deal with it was George Bush, tried to, and that did not go well at all. In fact, half the Congress, how they all stand up or they sit down or they boo or whatever, half of them booed when he said he wanted to have to make some changes to Social Security. So as they say, it's the third rail of politics, and it is a difficult one to try to solve. Are they going to do anything about it? My best guess is if you have a moderate Republican with a working, not a working in that you have to have supermajority, but also then can work across the aisles, I think you have a chance. Trump couldn't work across the aisle. He was nasty, right? He was hard to get along with. So people there didn't want to work with him. Could we have someone in the future? Yeah, they could. And somebody coming in that wanted to solve long-term fiscal problems, that's what we need. And that could help a lot. It would help there, Medicare, Medicaid. These are things that everybody's scared to try to deal with, but have to be dealt with.
Okay. Do you plan on rebalancing accounts this year? If so, what sectors do you like? Excellent
question. I meant to start this actually by talking about, we're not market timers, but we're entering this year with, I think, the highest cash, I'm sure it is, highest cash balances we've had on average across portfolios. Now, growth portfolios aren't going to have as much, but even they are, we're wanting to have some cash for buying opportunities, and we're starting to see some in technology in particular. But for those people on income, you'll notice that your cash balances have gone up quite high. And that the reason for that is we knew year-end distributions were going to be large, not because we had to sell off a lot, but we're not in a big hurry to get that repositioned. Not because we're predicting a sell-off, because we know we're going to have one. And we don't want to be caught with minimum cash when market is so high. So we want to have some cash. And if markets do sell off, people will have income. What does that say? No, we're not repositioning the cash. What it says is we are going to be looking at, one, technology, which has already been beaten down. Two, I still think energy can be bought in here, but what we're really allocating a lot of money to is real estate. It was a really good last year allocation for us. It was a good sector, but we can't allocate towards bonds. I know I've beat that to death. I won't do more than just touch on it, but we have got to stay away from bonds. They are seriously in trouble. In a rising interest rate environment. In a year, the S&P did 28%. Bonds were down 2% last year. So you can see it already happened last year, even though rates barely rose. It's because they're at such a low level, we really can't go near them. And if inflation is at all there, and I think it is, I'm not saying it's hyperinflation, but I'm pretty sure we have real inflation, and some of that is here to stay. Bonds will be particularly bad performers going forward. So allocation-wise, not a lot of changes, more of, like I say, just filtering into different sectors. And unless we get a sell-off, we're continuing to be pretty cautious.
Any other questions? Thanks for sharing a quote that Craig put up. Everything has been said before, but since nobody listens, we have to keep going back and beginning all over again.
Great point. I'm going to tag on to that, Craig, because I have years and years ago, I've been doing radio now for almost 35 years, right? And it feels like it's repetitive. So like I talked about that before, and it took me a while to realize that, one, not everybody's listening to every program every time. So maybe they haven't heard it. Number two, Craig's right. We just don't hear it. And it's one thing to teach, and teachers do feel it at a different level, right? We've said it and we feel it, we understand it, and you hold it more deeply. But the reality is, for most all of us, we need to have repetitive things in our life. And that's the advantage for us, is to be talking about and looking for what's going right in the world as to why markets go up. It doesn't mean we're blind to what's wrong. It's that you don't even have to see to know what's wrong, because it's blasted at us. You have to really see with clarity what's right. That's the hard part. That's the trick. And to find balance and hope, if you will, and surrounding ourselves with that is an important thing for all of us, because we need those reminders too.
Very good. Any other questions? Oh, here we go. Do you have any expectations regarding Europe versus US?
Ha, boy, I'll tell you, man alive, that's just something I know all of us inside are going, oh my gosh, we for years, what was at least 10 years, right, Jen? We've had wholesaler after wholesaler come in going, well, the valuations in Europe are a lot better than they are in the United States. It's like, yes, because they don't do anything. That's why. It's the greatest outdoor museum of all time. They haven't innovated or created anything. They embraced socialism 20 years ago and died. And that's exactly what's happened. And all you have to do is look at Europe, which is pretty much like us, except they're not free like us. And then you look at what's going on in Silicon Valley. That's why people like me are just crazy when we start, trying to involve government in decisions where entrepreneurs go crazy. And think about all the United States. We're 5% of the world. Five. That's it. Okay. We're a tiny bit of the whole wide world, but we make everything. We invent almost everything, including the best architecture, the best art in the entire world. And that's because we're free to express, free to grow, free to blow up, if you will. That's what drives it. And that's why the capitalism is such a great thing. But anyway, I digress. America is still going to beat the socks off of them, but I have to have a position there. And I'll tell you why, because they're starting to catch on to how bad they are, how much debt there is, how slow moving they are, how they can't compete against anybody in the world except each other, right? So the French company can beat the Italian company. Whoa, boy, that's awesome. That's great. That's going to be just awesome. But they're getting annihilated by the rest of the world because they're not competitive. So what's happening is they are starting to embrace some free market things and labor market things. And in looking at immigration as well, they have not been immigrating, and so their populations have been flat. It's a lot of things that are going on, a lot of moving parts. It's not easy, but also I'm looking there for income. Dividend-paying stocks are very good there. Okay, so that's one of the things that we're really big on, if you will, is the Europeans pay a lot of dividends. And when I'm looking for alternatives to bonds, because I can't buy bonds, and we want some income in the portfolio, Europe offers higher yields. So in that case, we're putting some in there, but we're still underweight Europe.
Okay. Any comments or insight on Israel and tech advancements investment?
Good. Israel's interesting because it is kind of like a little America, very, very, very little America, right? Out there, and obviously surrounded by enemies. Different situation, different governance, but they are really embracing biotech and science. And so I do think they have a tremendous future out there. They're a very small country, so it's hard to compare them, but I am very, very impressed with their economic and especially in the biotech space. Pharmaceuticals, biotech, Israel is a world leader in.
Okay. Based on the aggressive stance that China is taking toward the world and developing their new Silk Road across Asia and Europe and aggressions towards Taiwan, do you believe that the beginning backlash will gain economic momentum?
I hope so. I hope that the backlash against China does gain some momentum and slows down this whole, it seems like it is. The world is woken up to the fact that China, they're bad people. They're a dictatorship. They're not nice. They have 1 million people. It's 1 million people. I don't even know who they are. It's okay. We would be outraged by anybody else. But since our leaders and our tech people sell a lot of stuff in China, we kind of give them a pass. I feel like that's been being passed. And I know, I get it. I'm upset by the NBA and all those guys, especially the NBA, who are just like, oh no, go ahead and let them have Hong Kong. They're really nice people. They're not nice people. That's all about money. And that really sucks. It really does when human beings are like that they don't care about 1 million other lives and actually 1 billion other lives, because the Chinese are really quite oppressed, that they only care about their own popularity and wealth. It's a sad state, but it feels to me like it's changing. I don't hear people fired from the NBA for making a bad tweet anymore. I don't hear politicians backing down like they used to. And I certainly don't hear as much in business. Business is a tough one. I get it. It's hard to say, I want to build a factory there and I hate you, to a dictator. That's a tough one. So we do have a long ways to go there, but China has been found out. And I think that is a huge plus for the world.
Okay. Any other questions? All right. I think we're good.
Thanks, everybody. I really appreciate it. And Mike, thanks for putting the slides together. Great job. And I just look forward to our next time together. I know the market is awful right now. It truly is. And that's the way that it gets sometimes. I have to remind myself of that too. Thanks again. Have a great rest of the evening. And we'll talk to you soon.